Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we have Stuart Jackson from Montgomery Investment Management and Steve Johnson from Forager, and we're looking for that ideal mix of a little bit of growth that's not going to cost you too much in the share market. Steve, we'll start with you. Just had a great result. Retailer, JB Hi-Fi. Buy, hold or sell?
Sell. GARP has become GAPE in the Australian market, growth at an expensive price, and JB Hi-Fi fits the ticket.
Okay, Stuart, about 20 times, got a bit of growth in the system, not huge. Buy, hold or sell?
We're sell as well. Look, they've done very, very well for themselves, but it's fully priced at the current levels.
Okay, let's go to the mother of all growth stocks, Dominoes. Buy, hold or sell?
From our perspective, yeah, it's a sell. It's a great franchise, and again, they've done very well, but more than fully priced.
Who would have thought pizzas were worth $7 billion when we added them all up? Buy, hold or sell, Dominoes?
I'm unqualified to comment, having told people to sell it at 20 bucks, I think. So the fact that it's hitting 80, again, wonderful business. I just could not own it at these prices, so sell.
Okay, one industry that's done really well, going from static to digital, has been the outdoor advertising market. A leader of that has been APN Outdoor. Buy, hold or sell?
I'm going to say sell on this one as well. I think the trend has run its course, or is very close to running its course, in terms of the percentage of media spend that is going to outdoor advertising assets. We're hitting the same levels as the US and the UK, and I think it will level off from here. Okay, it's been tremendous performance since it listed, what, a couple of years ago? Yeah. Almost tripled, or probably more than tripled in share price. Buy, hold or sell?
From our perspective, it's a hold. We think there's actually got a few more years to run in terms of growing its share of overall media spend, as traditional forms of media continue to deteriorate in terms of the value they have for advertisers. So they'll continue to build their yield and create good fixed cost leverage and margin expansion associated with that. Longer term, valuation is potentially an issue, and there will be some redistribution of value back to the site owners, but at the moment, you know, we still think it's a hold.
Okay, here's your chance. Let's hear about a growth stock that is fairly valued and we're going to make money out of.
Yeah, one we like is it's a little stock that got spun out of Seek late last year, called IDP. It's the owner or joint owner of the IELTS test, the leading English language test on a global basis. And with increasing focus globally from emerging markets on education and the need to educate your children, there is increasing value or perceived brand value in Western world, and particularly English tertiary education, and these guys are the gateway to that. And ownership of that brand, it's low capital intensity in terms of the growth, and it's just going to keep chugging along. It's a great thematic on a global education play.
Steve, have you got one that we can add to that and we can put in our portfolio?
I'm going to run with Reckon. The ticker is RKN. It's not a super high growth stock at the moment. In fact, it's been struggling to grow it all over the past few years. A lot of investment going into the business, though, in terms of some new products and some growth opportunities, and I think there's a decent chance they pay off and you're not paying anything for them.
So growth is good and we should be looking for it, but we shouldn't be paying any price for it.